Hello traders, welcome back to the Forex gig. In today's video, we are going to explore the long only strategy, a powerful approach in the Forex trading that focuses exclusively on buy positions. This method has gained significant popularity among traders seeking to capitalize on bullish market trends. Throughout this video, you will learn key components of this strategy as well as advanced algorithm integration methods. Stay tuned until the end to gain valuable insight that could potentially enhance your trading performance and help you identify lucrative opportunities in the forex market. Now let's see what this strategy is all about. The long only strategy operates on the fundamental principle capturing upward market momentum throughout strategic buying positions. This approach eliminates the complexity of managing both longs and short positions, allowing traders to focus exclusively on bullish market conditions. The core strength of this strategy lies in the alignment of the market's natural tendency upward over time. By focusing solely on buy position, traders can develop a deep understanding of the bullish price action and the market psychology. Now, as we can see from this daily chart, we can see a sustained uptrend, making series of these are the series of higher highs, higher lows, higher highs, higher lows, higher lows, higher highs, higher lows. This is a sustained bearish move showing the creation of higher highs and higher lows as the case may be. Risk management becomes more streamlined with this approach as traders need to only monitor overhead resistance level and trailing stop mechanism. The strategy particularly excels in strong trending markets where price remain in a clear upward trajectory above key moving averages. Like if I'm adding the 20 and the 50 moving average, you can see price constantly remain above these averages at this particular time in the market when the market was trending to the upside. Position sizing plays a crucial role in this strategy because each trade should risk no more than 1% of your trading capital. So this will also help you allow for multiple position across different currency pair while maintaining predominant risk levels. This strategy effectiveness is enhanced during specific market conditions, particularly during the Asian European section overlap and the early New York section when institutional buyers actively tend to be most pronounced. Let's see how we can implement this long only strategy. This approach transform a basic directional strategy into a more refined trading system using the algorithm integration. This strategy employs indicators known as the VWAP. The VWAP indicator, also known as the volume weighted average price. This is the VWAP indicator, and you can see the line, this yellow line we can see in the chart. We can also see the TWAP. The TWAP indicator, the TWAP indicator is also known as the time weighted average price indicator. This particular indicator helps for executing large orders with minimal market impact. This systematic approach helps you to break down sizable positions into smaller and more manageable chunks. So the VWAP is the yellow line while the TWAP is the black line we can see on the screen. So the dark pool liquidity seeking algorithm are implemented to access deep levels of market liquidity. This method is particularly effective on markets when building large positions, as it helps to minimize price slippage and market impact. I'm taking my time to look for the best example to explain this strategy to you. So let's break down the algorithm integration for long only strategy using the VWAP and the TWAP indicators for more details. First of all, if you are to take a trade using this strategy, you first start by identifying the trend, and as you can see from the example, we are trending to the upside. The trend is obviously your friend, so do not trade or take any trade against the market trend. As you can see, overall market direction is trading to the up direction. We confirm our uptrend using our higher time frame, and if we go to our higher time frame, let's say our 4-hour time frame or the daily time frame, we can see that the chart is trending to the up direction. As you can see, it is also showing that we are in an uptrend. We also have to look for higher highs and higher lows on the chart to be sure that yes, we are also in an uptrend on the lower time frame we are trying to capitalize on. So spotting my higher highs and higher lows in the chart. These are my higher highs, higher lows, higher highs, higher lows. It's not clear, but if we pay attention to the price, we know we are following the direction of the market. We will calculate the VWAP. By when we plot the VWAP, I told you that the VWAP is this yellow line on the screen. The VWAP represents the average price weighted by volume. The VWAP indicator signifies the average price weighted by volume. We calculate the TWAP, and the TWAP is the average price over a specific time period. We have to wait for the price indicator to align. We have to look for price to approach both. We have to look for price to approach or cross both the VWAP and the TWAP line. As you can see in this area, price cross the VWAP and the TWAP line in this area. This alignment suggests a bullish momentum. We also have to check our volume, and as we can see from our volume indicator, this particular area where the price trades across this VWAP and TWAP, the volume increased. It was showing us a down volume, but at when it crossed over, there was an increase in the volume. We have to check the volume. Then how do we enter? We place our buy order when price pullbacks and touch slightly the VWAP line. We can also use the TWAP line as a secondary confirmation. So I'll buy my trade after price broke above it and comes back to retest it. I'll enter my buy position at that particular area. Let's not forget position sizes matters. Calculate your position size based on your risk tolerance. Example, always risk 1% of your trading capital. Let us not forget that our risk management is also important. So we have to divide our total intended position into smaller chunks of trade so that we can add positions as time goes. If we can take, let's say we divide our 1% of our account into 4 or 2 positions. If it's 2 positions, that means we will first enter with 0.5% of our account, and as time may have it, we can enter another position in the chart. So the first position we entered at this area, it is when we find out that our initial conditions are met, we enter the position. We can add another position when price continues to stay above the VWAP and TWAP line, if price stays above, you can enter another position at this area. This is now making it a total of 1% of my position of my account size. Remember, we are risking just 1%, so I split my entries into 0.5% to make sure my account can survive scaling in. Let's not forget our stop loss. We should always set our stop loss below the initial swing low. It should be below the initial swing low. That's where we put our stop loss, or we can decide to use a trailing stop. As price move in our favor, we use a trailing stop loss. Our profit target, we can use multiple profit targets easy. We can use previous resistance or previous support areas, or we can use a fixed profit target of 1:3 and above. We can also consider trailing our stop to maintain position to capture extended moves, as the case may be. We have to monitor and adjust. We have to continuously evaluate price action relative to the VWAP indicator and the TWAP indicator. We have to exit or reduce position if price constantly trades below this indicator. Once we notice price is coming below this indicator, we should immediately start removing our position or close our position. By following this step-by-step approach, traders can systematically enter long position while using the VWAP and TWAP indicator to optimize entry timing and manage large orders effectively. Alright traders, we have come to the end of this video. The long only strategy represents a focused and a systematic approach to the forex trading that can yield consistent results when properly implemented. You now understand the core components, from basic entry condition to advanced algorithm implementation, that makes this strategy effective in today's market environment. Remember that success with this approach requires patience, discipline, and strict adherence to risk management principles. For further valuable trading insights and strategy breakdown, make sure to hit the like button, subscribe to the channel, and turn on the notification by clicking the bell icon. Your trading journey is important, and we will continue to explore profitable opportunities in the forex market on this channel. So stay tuned, and we'll see you in the next video.